What's up guys, welcome back to InvestingPH. So another episode of my monthly portfolio update. So far my portfolio's value is 2.8 million. This is from my invested money of 2.4 million. And I have a total portfolio gain of 15.16% or 370,641. So far this month, the market decreased a bit. Started April at 6,900 level, now down to 6,619. Though our lowest for the month was around 6,400, but if we look at the index from when I started investing, it is down negative 18%, and I also compare my portfolio to FMETF, which is an ETF that tracks the PSCI. It is still down a negative 12.14% from the day I started investing. I also do this as FMETF accounts for dividends reinvested as well. Now, I've seen comments saying I have 2.4 million invested, and I only have this much gains after more than 4 years of investing. Well, I just want to remind my viewers that I didn't have this amount when I started. I only have 70,000 back then, and slowly invested my way to my current invested capital. So more than half of my current capital today had around a 2-year investment period. This is also why I use my own portfolio tracker and a paid portfolio tracker like Simply Wall Street to better track my returns. As you can see here, it says my portfolio has returned 6.37% annually since inception. So how is this even possible if I only have a total return of 15.16%? Well, the way trackers work is they account for how long your money has been invested. So let's say you invested month after month. The computation for your annual returns gets confusing as your money has had different investment lengths or periods, unlike for those who just lump sum their money. And what your broker can show you is limited. It only shows total returns for each stock in your portfolio, but it doesn't take into account the dividends you earned and the dividends you've reinvested. That's why when I show my portfolio returns on my broker, the difference is huge, not because I altered it, but because it doesn't show all the stocks I've sold in the past and have reinvested back to my portfolio and the dividends I reinvested. As you can see here, most of the stocks I own are in the negative, 11 out of my 20 stocks, but if you jump into my Simply Wall Street tracker, it goes down to 8 and the negative returns drop so much. This because it also accounts the returns I got from dividends. Though not all of us need to spend money on a paid tracker, if you can do it yourself and track each stock you have and know how to really compute your annualized returns, then you can do it yourself. Oh, by the way, I'll share a link down below to an old tracker that I use. I found this online, and the annualized return it gives me is the same with Simply Wall Street's computation, so I guess it's accurate. And by the way, if you want to use Simply Wall Street, use my link below and get up to 40% discount. I really suggest having your tracker. It levels up the feel of your investing journey, and for me, it just motivates me even more to continue on what I'm doing as I see my progress going up. It feels like I'm in a video game. So going back to my dashboard, for April, I got 6,716.74 pesos, which makes my 2024 dividends to 45,092, and my latest 12 months is 128,102, or a monthly dividend income of 10,675. And since my broker now has a well-presented dividend history, I can now show you the stocks that gave me dividends last month. This adds even more transparency of my portfolio reveal, as I'm not only showing you my portfolio directly on my broker, as well as the dividend transactions. If only DRAGONFI had a filter function to only show buy transactions, then I can show it to you guys as well. The only stock missing here is MREIT. I don't know why it didn't show up, but maybe because I just recently transferred my stocks here. But anyway, MREIT, Shang, and Security Bank gave me a total of 6,716 pesos, and recently, DMC just gave a huge chunk again, but that's for May's portfolio update. I also have upcoming dividends, which are China Bank and DDMPR. I just love this function of DRAGONFI so much. That's why if you haven't tried DRAGONFI, use my link below to sign up, and both of us can get up to 1,500 pesos. As for the stocks I bought, I have been consistently buying AREIT. My investment here has reached 111,000, making it 3.9% of my whole portfolio. If you haven't watched my latest video of the stocks I'm buying, I've shown there my research on AREIT. I think this REIT will be a good addition to my dividend portfolio as its financials have grown steadily over the years, and Ayala just keeps on putting in more assets into it. This for me gives it a higher chance to grow its dividends. For the average price I bought it, it gives me a yield of more than 6.3%, and what I love about REITs is it gives me dividends on a per quarter basis. The advantage of this is I get to compound it immediately if I reinvest the dividends to a stock that will still pay dividends this year. So I'm already letting that snowball take effect immediately. For the second company I bought, it's Security Bank. Now the company's stock price has gotten lower and lower, from a high of 248 pesos back in 2018 down to 70 pesos per share. Its price is nowhere even near its pre-pandemic price of 203. But if you look at the company's financials, revenue had been growing steadily, though its earnings haven't yet gone past its pre-pandemic level. But the reason why Security Bank had the lower earnings last year is they set aside a higher loan loss provision of more than 4.7 billion compared to 2022 of only 2.6 billion. So even though their non-interest expense went up, if they didn't increase their loan loss provision, their net income would have been higher and I think would go past its pre-pandemic level. Take note, the drop in earnings for banks in the pandemic days were due to a higher loan loss provision. It was not mainly because of their income going down. This is like a safety net for banks to cover any bad debts. If you look further, the total loan Security Bank has given is continuously rising, and their other income from service charges, fees, and commissions has also risen consistently over the years. As for dividends, they've slowly increased it since 2015, from 1 pesos per share up to 3 pesos per share in 2023, and with its price dropping, its yield right now sits at 4.29%. So this is my outlook for this stock. The revenue pre-provision is growing, loans given out are also growing, and if you look at whom they are giving it to, 40% of it is from corporations, the biggest industries in the wholesale, and for its consumer loans, home mortgages, auto, and credit cards take up the highest percentage, and 60% of their loans are long-term. So with a consistent source of cash flow from the loans they lend out, and they are continuously growing it, as well as their non-interest income, I think there is a high chance their earnings would continue to grow in the future. With this, their dividends will follow as well. That's why I'm buying more shares of it, as their price is way undervalued. Price to earnings is only 5.9, and price to book is at a very low 0.4. If you compare it to its peers, BPI is at 1.8 price to book ratio, BDO 1.5, China Bank at 0.7. This is still quite low considering China Bank's stock price has gone up recently, and AUB 0.6. So though a lot of bank stocks are still trading below book value, Security Bank is at the low end of it. Now I just want to talk about the issue of Abra mining, or AR. Now I don't want to tackle the details, but they were suspended on March 3, 2021. It was for reasons of serious violations on its listing and disclosure, but this led to many investors hanging. Right now, the SEC files criminal charges for fraudulent trading of shares from 2015 to 2019. I don't know much about this company, but I just want to talk about this because many investors or new investors may question how can they prevent themselves from investing in these kinds of companies. Because just imagine, if you were a shareholder of this company, you were left hanging for years without any power to even sell those shares. Because this can really happen sometimes. We don't have the power of big investors like Warren Buffett to talk with the management and CEO of companies he invests in. How do we as small retail investors prevent this from happening to us if the data or information that we can gather is limited? For me, the answer is quite simple. Know the company first. Have your checklist. Let's just take a look at AR's financials. Just take a look at their revenue. For 2012 to 2019 is zero. Just this alone is a big red flag. And look at its net profits. Does it even have one? No, it's even in the negative. As a value investor, just imagine you're investing in a company that earns nothing. And not is it already a big red flag that its net profits are negative, but revenue's zero? There's something fishy going on. So this alone, I would trash the idea of even further analyzing the company. I know my limitations. I am not some angel investor who will squeeze the tiny details just to see if I can earn money from this. I know my limitations and I won't take that risk or bet my money on it. I need proof. I need to see if its earnings are growing, the balance sheet is good, and debts are managed well. This alone gives me an idea of how the management of the company is. If the company is growing and growing its negative earnings, then there's something wrong. I won't bet my money on a management that can't produce positive earnings or grow the company. This just speaks for what kind of people are behind that company. Now, it doesn't have to be this worse of a scenario. Many new investors get stuck in a situation where they question if the company would even rise in the future because they are down big time. And they are so worried because, well, the company isn't doing well big time. They are praying for a miracle to happen, that a news will pop up in their feed that the company turned 180. If you've watched some of my stock analysis videos, you know my thoughts about Dito. I did a stock analysis of it on June 8, 2021 when it was trading at 8 pesos per share. Up to this day, it is my most unliked video. It had a like to dislike rating of 94%, the lowest of all the videos I've uploaded. I got a lot of criticism, and so many expert telco investors came into my comment section. But you can laugh at me all day long if it once again rises for more than 10 pesos per share. And yes, there's a chance that this company can make a 180. I can miss out on a big chance while it's down, but I won't risk my money on a speculation that this company would make a 180. You know, right now, its earnings are growing, by the way, growing more negative year after year. So as an investor, a small investor such as myself, this is the amount of data I can get. It shows me negative earnings, negative growth, so why would I invest in it? This for me is the way you can prevent yourself from getting stuck in these kinds of situations. Invest in companies you're comfortable with. I always mention this. Where would you feel more comfortable if the stock price drops 40%? Company A has growing revenue and earnings per year, well-managed debts, and even growing their dividends. Or Company B which has negative earnings and equities and growing. Would you even dare average down on such stock? No. For Company A, you would even be willing to buy more of it. So as a small investor who has limited capabilities to get information from the company, just by following these set of guidelines of investing in companies that have good financials, growing equity, debts are managed well, and are trading at a fair price, you'd sleep well at night knowing the companies you are investing in are safe. Not safe of course from price volatility, but you know it would be there for the years to come. You know management is doing their best to grow the company, and chances are you wouldn't be worried about something like what happened in the AR. So for you not to be in that situation, study first the company you will be investing in. With that said, I hope you've learned something from this video, and if it did and still haven't clicked the like button, then I'd appreciate it if you do so before leaving. Thank you and see you in the next video.